This is the wrap-up for the live market open for Friday, February 12th. Thank God it's Friday. Thank goodness. Finally, perhaps some kind of relief to markets after a wild, wild week. What's going on? Currency wars have intensified to some kind of intervention. The Bank of Japan seemed to have intervened yesterday. Big spike of nearly 200 pips in dollar yen. Talks about emergency meetings. A sense of urgency in Tokyo and the government and the central bank. Also, the Swiss franc did some interesting weakening. Worries in global markets are about falling oil prices that reflect low demand, but also supply. Let's not overreact. Worries about German banks exposed to commodities. Worries about various companies. Yellen, in her second part of the testimony, the chair of the Federal Reserve, the most powerful central banker in the world, said it's not our fault. I mean, that in other words, of course, but said the rate hike was justified, okay? Of course, and she blamed a bit China, which is unjustified. There are so many factors. Anyway, the global markets are in a bear market. Remember, equity markets not always reflect the real economy. But a 20% drop from the highs in the world in general. Oil prices are a bit off the highs, off the lows, but still on low ground. Okay, let's look at a bit at currencies in the wrap up. We have this morning we have some kind of an improvement in mood after the Nikkei crashed by nearly 5% after the sell-off yesterday. We have some kind of relief in European stocks. I don't think this will last too long. This relief means a stronger dollar against the euro and against the yen, so less demand for safe haven. Range for euro dollar currently 112.50 or 112.15 perhaps to 113.75. Further resistance 114.60. Pound dollar hugging 145. Perhaps some support there at 144.50 and then 143.65. Stronger support 146.50 on the top side. Dollar yen currently in some kind of range between 111 to 113 almost. Remember, the Bank of Japan may intervene. Canadian dollar showing some strength despite the crash in oil prices. 140 seems a tough nut to crack. 137.87 is support, 140 resistance. Aussie dollar, Stevens didn't say too much overnight. 70 is support, 71.40 is resistance, 72.20 further on the upside, 68.30 on the downside. Kiwi also in range, 65.80 to 67 resistance, followed by 67.40, almost at 66 as we speak. Today, the big events come from the United States. Well, we still have before that Italian GDP at 9 GMT, and then Eurozone GDP. Germany came out more or less as expected quarter over quarter, but a disappointment year over year. Let's see if Eurozone GDP meets the expectations of 0.3 quarter over quarter. I don't think we'll have huge surprises over there after Germany did not surprise on the quarterly figures. Then the focus shifts to the United States of America. Retail sales for January. Watch out for the control group, sort of the core of the core. Watch out also for revisions. Retail sales have disappointed too many times in 2015. This is the first report for 2016. Also, at the same time, we have import prices. At 3 GMT, we have consumer sentiment from the United States. Also important because it's a fresh figure for February. We're expecting a small rise over there. And Bill Dudley, number 3 at the Fed. Janet Yellen is number 1. Of course, Stanley Fischer, the vice chair, is number 2. And Bill Dudley, the president of the New York Fed, is number 3. He leans a bit to the dovish side, but is close to Yellen. So his words may be of high importance. Okay,